Hi, I'm Mal from the Money Study, bringing you another episode in the Ultimate PSS Education Series, number 48, about the investment options and performance. This will have a different impact whether you are a contributing member or a preserve member. But before we get into it, there's the disclaimer: facts and figures, information only. This is not advice. Now, on your statement, you'll see listed as a contributing member there your investment options. Now, of course, it just says default. There are no options in a contributing member because you can't move your money, and quite frankly, there's no point even if you could. Such, because what it all comes down to is the investment returns really have no impact whatsoever on your gross benefit. Your gross benefit as a contributing member is your final average salary multiplied by your ABM, your multiple. It doesn't talk about investment returns in any of that. You can't go backwards or upwards or downwards. Your gross benefit is your formula. End of story. It is your formula. The investment returns could be negative and or they could be positive. Either way, it really has no impact on your gross benefit. Yes, it will impact on your tax. Only marginally, basically, but what it boils down to is if the share market does fall, you can't lose money. You have got your formula to protect you as a contributing member. Therefore, if it does fall, the investment does indeed go down, but the employer really just has to make that up. He's got to replace the difference to make the formula work. You're only impacted by the fact that the money has now come from the employer, which is unfunded, compared to the money on its earnings, which is funded. So it affects the taxation. Now, of course, if you are a preserve member and you've got a member component, and that money is indeed going backwards, yes, your PSS would indeed go backwards, and you could leave your PSS there for 2 or 3 years only to find that it's actually indeed gone backwards over that period of time. So when you're a preserve member, you do indeed have a second option. You've got a default option and you indeed have a cash option. So only 2 options, unfortunately, which is a bit sad. You don't really have a lot of control if you are a preserve member, that's for sure. Now, cash options a bit like having your money in a 90-day term deposit, so it's a fairly low rate of return, generally speaking. Obviously, with interest rates going up, you're going to start to see much better returns on your cash option. The default option is pretty much like a balanced option in most sort of super funds, so it's a mixture of Australian shares, international shares, property, fixed interest and so forth, and with that blend, around about that 65 to 70% of your investment would indeed be in growth assets, things like shares and so forth. So if the share market does fall, yes, you would expect to see negative returns if the share market falls, literally because you've got about 70% of your money in a balance in that default option is exposed to shares. But I say for a contributing member, not a lot to worry about. Your money can't go backwards. Preserve member, yes, you do need indeed think about switching. I believe in the PSS you can indeed switch it twice in a year. So if you do switch it to a cash option because you're worried about what's going on, you can indeed move it back again. Okay, that's pretty much it. Fairly straightforward, fairly simple compared to obviously to all the other super funds. It might be a bit different if you've got some other super funds you need to worry about. Come and have a chat about how all that works when the share market is indeed starting to worry you. Talk in another episode.